Boom, we are alive, ladies and gentlemen. Thank you all for joining us today. This is Tio and the Arcane Bear. Now, as you can tell by the title of this video, is the Bitcoin bull market over? What I want to do is answer that question and tell you why I don't think it even matters. My thesis around this generally is just net long accumulate. There's a reason for that. Since they started printing dollars, the markets have pretty much only gone up, again showing us that the value is in the underlying assets and not in the currency itself. The currency is designed for velocity. So just go ahead, we'll start with the charts and we'll take a look at a few things today. We will go over the amount of Bitcoin there is on an open exchanges, and we will take a look at a few of the other side areas of this whole market. So there you go. Bitcoin on the daily right now. And as you can see, we're actually really high up. So what I wanted to do is show you why I don't think it matters. I know a lot of you are probably new to investing or buying Bitcoin, whatever it might be, probably just investing in general. And one of the things that's important to understand is, let's go all the way back here to 2017. And let's say that you bought at the top of the bull market. So here we are, we're way back here. We're at the top of where distribution was in the market cycle. And you bought here at around $14,000. Now the downside is a lot of people will go, oh no, well what if I just take a slight loss and then I rebuy back more? It's actually significantly better, again, to remember this idea of net long accumulate. One of the reasons being, it plays out the best over time. A lot of hedge funds can't even outpace the S&P 500. And one of the best things you can do is just consistently accumulate assets because they're printing dollars, and therefore the price of the assets is going to appear to be going up because the value of the dollar is going down as they inflate the monetary supply. So you buy here, and then what you want to do is just keep buying and consistently buy on a month-over-month basis. This is one of the best ways to get a fairly well-rounded accumulation price. So let's say between 2017 and 2020, you just bought on a month-over-month basis. And what ends up happening is you end up getting an aggregate price around the middle of the channel. So you would have ended up getting a price probably around $5,000 to $7,000 for Bitcoin on everywhere across, even if you did buy at the all-time high. A lot of people enter the markets thinking that, hey, I'm going to be a trader my first time in the markets. And what they don't realize is that the markets are age old. They were here before you were born, and they will remain here after you die. They are really good at taking your money away from you. So how do you beat that? It's by joining in the wave of accumulation. So let's do the same thing. And I like doing these retrospective analysis because it's important, I think, especially for the beginner investor, to understand that yes, we do get gains. We do get the opportunity to take profits. But if you are new here, profit taking shouldn't be your primary motive. You shouldn't be using investing as your way to pay your bills. It should be a portfolio that you build and grow over the course of a decade, 2, or maybe even 3, to sustain the long-term effects. So you should be going to your regular job, or probably not have a regular job, and find something that you actually like to do and consistently accumulate along the side to build that portfolio. So here we are. Oh my God, you bought Bitcoin at the all-time high of $1,200. Now again, the only time that this becomes a mistake and important is, well, first off, again, in our thesis, if the bull market is over, great. That means it's time to start accumulating. And what you do is, okay, well, you bought at the all-time high. As long as you keep buying throughout the range of the next year or two, potentially, what you end up getting is this nice midway point of accumulation all the way through the channel. And then when you get these massive explosive moments, you can rebalance your portfolio. You can take some of those profits and turn it into other assets, whether it's a house or starting your own business. So had you bought at the all-time high of $1,000 in 2013 and continued to accumulate, you were up significantly. Had you bought at the all-time high of 2017 and continued to accumulate, you would be up. The problem here is a lot of investors think that they're going to become traders and they end up just losing money. My goal, the Arcane Bear family's goal, is to help you make less of those mistakes and hopefully lose less money along the way. One of the first things you want to do is learn how to protect your capital, not increase it. If you can protect it, you're well on your way to increasing it, right? So what I wanted to do today was just show you almost the irrelevance of a buying point if you know the value of an asset and you focus on a long-term strategy. right? We took profits, some, not all, near the $56,000 mark. So no matter where the market goes right now, I'm happy. If it goes up, great, I still have exposure. If it goes down, great, I can get more exposure. This is the mindset you want to deal with, and I think I highlighted it kind of nicely today on Twitter. If you are not yet following us on Twitter, please go follow us, Arcane Bear on Twitter. I really liked this one here. This is a quote from me. It says, if you're not prepared for the downside, you are not prepared. And you know how you prepare for the downside? Focusing on that macro perspective of what we just went over, which is this long-term game of accumulation in valuable assets. Now, Bitcoin is volatile, both to the up and downside, and that generally favors our goal here as long as we're patient. Most people I saw in the chats like, well, what if I bought up here? Should I sell and save some of my capital to rebuy back here? No, you should continue to go to work and use the job or your business or your entrepreneurial ventures to continually accumulate and not really think about selling unless, again, of course, you started to accumulate way back down here and you managed to accumulate, let's say, 25 Bitcoin, and you go, yay, this is amazing, I've made so much money. You take some of the risk off the table because we are up like 10x or at least 3 or 4x from that kind of median position around $6,000. So it's important to really understand the long-term macro thesis. Otherwise, the new investor gets washed out. They don't show back up. They were here for the right reasons because Bitcoin and the rest of the crypto sector is valuable, but they get caught up in price and underestimate the value of a macro perspective on the long term. So I want to keep repeating this because I know a lot of people get caught up in the confusion and the hype of, oh my God, the markets are over, the markets are a bull. It doesn't fucking matter if you understand the game. Now, again, the goal here is to help most beginner new investors save themselves from making those mistakes. And then for the more advanced ones, we're trying to learn as much as possible to make sure that we take advantage of these market moves like with as much fervor. Because remember, if you have been with the Bear family for the last few years, this moment around March, when they started, I guess when we all went into lockdown, we've been in a straight up bull market since, and we started to scream why. You can go back and watch our videos. It's because every bull market starts with an enormous amount of fear, and once that fear starts to subside, the price increases. So on a more of a micro time frame, what I wanted to point out today was just a little bit of, well, there's a few things I wanted to go over. So this is more of a micro perspective. Again, don't let any of the frill here throw you off. Think about being a good long-term investor before trying to be a trader. It's just a smarter move for you in general, and that's at the very least we could do for you. Okay, so here we are on the 6 hour right now, and as you can see, we've got our horizontal trading range with a falling wedge. We are right at the point of control now. We are hitting the top of our wedge and the top of our channel. I think this is very important, and there's a few kind of fun things to show how much correlation there is in this space right now. So I'm about to turn on my Bollinger Bands, boom, and I'm going to turn on the Bear Claw, boom. Okay, so here we go. Actually, maybe I should turn the Bollinger Bands off to start, and we'll add them secondarily. So here you can see with the Bear Claw, we have both the 200 and the 314-day moving average, effectively representing the top of our trading range and the bottom of our trading range. Here's the bottom, here's the top of the trading range. This is important for two reasons. Right now, we are seeing a fair amount of correlation between the top of our trading range and the bottom of our trading range. And if we turn the candles on, we can see that the wicks have even more closely aligned with these particular areas of interest. Boom. There you go. Here's the wick up into the top area of our Bear Claw as well. So what's the point of this? If TO is saying, hey, you know, you can just always accumulate, why would we even bother looking at the markets on these shorter time frames? Well, let's just only focus on the market for a second and forget about TO. What are we trying to do? We're trying to gain as much information as possible about how and why and what has happened in the past so we can try to understand what happens in the future to make sure we remove as many of the emotions as possible from our day-over-day accumulation range. And you can go so many different places that are going to consistently try to increase the amount of emotion that you have, just like we've done today by saying, hey, is the bull market over? Is this game over? Is this it? And that's what you want to get rid of. You want to get rid of that noise. And one of the best ways to do it is by consistently educating ourselves and going through these retrospective studies so that we have as much information as possible to glean from, so that we don't get caught up in this small view thinking, oh my God, if I sell here and it goes down to 20 grand, I can buy back in here. Well, if you know that the macro thesis is just buy everywhere and just keep buying everywhere, over time, that bodes well. Now, there are obviously examples where companies where if you had kept buying, you would have failed. The Encyclopedia Britannica is a great company to use as an example because Warren Buffett let that one fly straight into the ground. And one of the things we want to keep in mind is that when we're looking at a macro perspective and then also zooming into a micro perspective is that yes, some companies fail. It's not always pertinent to just keep accumulating. And this is why we always lead with the idea of tails, I don't lose much, heads, I win. And if you keep doing that on a month-over-month basis in things that have value, you do win. Now, let's say Bitcoin were to fail, it goes to $0. Well, did you lead with the thesis of tails, I don't lose much? Because for each of us, that's a little bit different. I could lose, say, $100,000 and it wouldn't really bother me all that much because I know how easy it is to try to make that back. Now, again, the important part of this story here is don't get caught in the minutia, even though we're using it to study. Remember the macro perspective that we have seen, and the S&P 500 is another good way to look at this. So I'm going to very quickly look at the macro markets. I want to give a shout out to one of our private Bear Den members who pointed out the other day that, as a matter of fact, I was actually charting the NASDAQ as a company, not the NASDAQ composite, so I do apologize for that. Thank you for pointing that one out to me. I wouldn't have noticed otherwise. So for those of you that are interested, the ICI or IXIV, what was it? IXIC? Yeah, there's the NASDAQ composite. So I apologize for that. Thank you for pointing that out the other day. For those that are interested, I was actually accidentally charting NASDAQ the company instead of NASDAQ the composite chart. And NASDAQ the company performed really well, but the composite chart actually looks a bit more comparable to the S&P 500. And here's the worrying part. Right now, or not worrying, but signals that we could see a market down move. I'm not too sure for how long, but just that it's in the cards. So here we are with a horizontal trading range on the NASDAQ, and we are hitting a top. So NASDAQ composite finally, not the NASDAQ, the company. Thank you. So the S&P 500 has actually done the same thing. We've been watching it closely in the private Bear Den, and as you can see, we'll get rid of these yellow lines as they're a bit thin. Let's make this trading range much clearer and visible. Right now, it's important to note that we are in the biggest bubble of history and that we've actually been going down this line of inflation for an extraordinarily long period of time. This isn't something that just happened overnight. We've been in this, let's call it the everything bubble. I think that's what Michael Burry called it yesterday in the tweet that we shared. We have been in this everything bubble for a very long time. Let's go, and again, here, this is another good macro and micro perspective. Here we are in the 6 hour. Here's the micro of the trading range we're looking at. Let's look at the 1 month chart for the S&P 500 so we can see how irrelevant it is, or at least how irrelevant it looks in this long-term time frame. So most of you will have been born probably before this chart starts, at least where I've got data up to at this moment, before 1994. But as you can see, even with this limited time frame of data between 1994, we had a very long accumulation range. Here's the .com crash, and here's the 2008 crash. They look almost irrelevant. You had, a down cycle within the trading range of approximately 48%. Now, a big part of the question is, okay, we have some very, very strong forces in the economic system that's taking place right now. What is that economic system that's kind of breaking? And why is it important to understand? Yeah, it is a little blurry. What's up with that, hey? Anyways, okay, so we'll ignore that. Hopefully it comes out better when it's not streaming. I'm not sure. Maybe it's something I could fix. I'm not, the fact that I can do any of this and live stream is like mind-boggling to me. So I apologize if there's any technical difficulties along the way. I spent most of my time eating plants. Okay, so the point here is that between 2000 and 2016, we had this pretty interesting trading range where both the .com crash represented a 45% down move and the 2008 crash represented another 40% down move, effectively a spring to some degree or another. So here would be your automatic rally, your secondary test, your spring, your LPS, and then we've been in a bull market ever since due to money printing. So one of the things we can do here, and again, I'm trying to get a large story across, is we can actually add the M2 monetary supply to this chart right now. So here we have the M2 from the Federal Reserve, and we're just going to make this a different color. Let's go with purple. Yeah, a darker color. There we go. Looks much better. Okay, so here we go. Again, the point of what we're trying to do right now is show the monetary supply and the inflation of the market based off that. So every step along the way here, the monetary supply has been increasing. They've been creating more US dollars, and the market has been going relatively straight up since then, since this moment here. So here's the problem, right? Everyone's like, oh my God, the stock market is a gamble because look, you can lose 40 to 50%. But if you were always, again, only patient and you bought everywhere along here and just kept buying, you're up. Now here's the dangerous part, right? We are somewhere within the next 5 to 10 years about to see one of the craziest moments in history where this is not sustainable forever. Something is going to break. Whether it's the US dollar or whether it's this current bull market move that we've been in for the S&P 500, we are going to see a systemic collapse somewhere along the way. Now, Kathy Wood, probably the only macro perspective analyst that I follow, the only person that I listen to, said somewhere around 2038 they expected the bull market to end. But hey, fair enough. Why not? If they keep printing, and we know that currency is basically the world's largest Ponzi scheme, people that can print it all they want, then where is the value? The value is in the assets. The value is in the productive services and businesses that entrepreneurs around the globe create. And the currency is just a way to measure the value between each of these people effectively, right? This is why Bitcoin is such a unique conversation, is because for the first time, even though it's extraordinarily volatile, we're choosing to pick our own money. And that volatility, it comes into play because people look to take profits back into the US dollar, which is currently failing. We haven't hit a point yet where the mass public understands that inflation is actually almost in a runaway state, but you have every single country printing. So let's just be clear here for a second. You have Costa Rica, India, I don't know how many other countries, Mexico, Paraguay, Uruguay, Bolivia, Brazil, Argentina, let's go to the other side of the world, India, Indonesia, Japan, China, all printing extraordinary amounts of fiat paper capital that is absolutely worthless because there's no intrinsic value to any of it. It's just used as a mode of currency supply to send between one point and another. This is really difficult to understand because most people look at currency as the value creator for the moments of what we use to decide the value of a product or a service, when really it's basically a global mass hallucination. No gracias. So when we're in this moment, well, and first off, sorry, the maid was trying to come clean the room. It was the absolutely wrong time to clean the room. What I want to get across is that one of the reasons why Bitcoin is such an interesting part of the conversation is because it represents the potential for a monetary supply of some form or another that is not being manipulated by the government's ability to go, hey, we've had a pandemic, let's just print some extraordinary amount of capital in the trillions of dollars and give it away to people. And now people don't want to work anywhere. They just want to rather sit and put that money into Robinhood and watch everything go up. This is the biggest bubble. And it did not start today. It did not start at the beginning of this pandemic. It started a long time ago. In fact, the charts that I have here for the S&P 500, it doesn't even go back far enough to see that. And here with the dollar, it doesn't even go back far enough to see that either. This trading view data for the DXY here right now only goes back to 1970. And as you can see, there's been nothing but a constant decrease in the value of the US dollar over time. And one of the most difficult parts to understand is that if the value of the currencies are going to keep decreasing, it is very likely that the value of the assets are going to keep increasing. And if you would like to, here's another fun way to look at it. We can go to Weimar Republic inflation. So I want to show you something that's just ridiculous to look at. So Open link in new tab. Weimar Republic hyperinflation. Let's see. I would just open image in new tab. There we go. Okay, so here is the value of the German marks or gold mark versus paper mark. So hyperinflation actually took a little bit of time to really take off. Here we see between 1919 and 1922, it was kind of a slow process. You had 1 gold mark to 10 gold paper marks, 10. This is like a 10x, and then 1,000, and then what is this? A billion? Does that say a billion? 100? There's 100 million. Yeah, there's it's the trillion. Shit, that's a trillion. Extraordinary amounts of inflation. Yet this was just one area in the world. This didn't include the rest of the countries. And right now, one of the reasons why we don't see such extraordinary runaway inflation is, as we went over yesterday, we have the deflationary battle, the fact that I can afford a camera and a microphone and I can go live to, what is this, 400 freaking people right now. Give us those thumbs up. it's a lot of people. That 10 years ago, that would cost millions of dollars, tens of millions of dollars in airwave licenses and frequencies. Like, I could have never have done it. But we can now. So this technology is making it cheaper and cheaper for people to play the game. I can do something you could have never done 10 years ago. Like, you would have needed tens of millions of dollars. Maybe 20 years is a better way to say it. 10 years ago, you could have, maybe it would have cost $5 million. 20 years ago, you could have never done what we are doing today. And you can do it. You could pick up a cell phone right now. You could pick up your cell phone, you could press the live button, and before you know it, you would be live to a bunch of people around the world, just like we're doing right now. And that's crazy. What we're trying to do is measure this butting heads of the inflationary nature of the printing of currency and the deflationary nature of technology. And this is one of the most interesting things about something like Bitcoin, is it is deflationary technology by the core nature of it. Not just Bitcoin, but all technology is inherently deflationary. It should reduce the cost of the ability to enter the ecosystem, just like this camera and microphone has done for me, and this light that I have here. This has reduced the cost to the entry point. The fact that we can do this is unimaginably fast. I don't know about you guys, but I'm old enough where I thought, like, I used to build transistor radios when I was younger. You know, we like wrap the wire, or you put the diodes, and you got your little earphone. You got to connect the wires and solder it. I don't know how many of you. I'm sure most of you are probably old enough to remember this, but I thought it was crazy cool. I'm like, oh, imagine I need a 50-foot tower to send radio waves, and I could have an audience of people. What? And now we're live in HD with this crazy, beautiful camera and microphone, and it costs less than, let's say, $10,000 to get. That is an extraordinary amount of pressure on the financial ecosystem to basically level the playing field for anyone who wants to enter. Now, this is decentralization, whether it's Bitcoin or it's a camera. We are being forced through deflationary forces to find new ways to build businesses that can constantly increase value. Now, again, I'm not an inflationist. I don't think they should be printing money, but what other choice did they have, really? Here, if you stayed on gold, we may not have been able to accelerate to the point where we are right now, where we can make these videos. So, okay, let's hone in on the purpose of this conversation and kind of finalize it. I don't care if the bull market is over. It is going to represent a moment, just like we've seen in the long-term history, to accumulate assets that are actually valuable versus a currency which has no value. Let me say that again. No matter what the market does, if there is a valuable asset, property with water, Bitcoin, any number of things, a functional business that's providing a product and service, I would much rather own that than cash. Cash is a liability. They're going to keep printing it. There is no other choice. Whether they increase the rates or not, it does not make a difference. This story has repeated itself, and it always ends the same. The currency collapses, the product's prices inflate to astronomical levels. There's an entire collapse of everything as people have to reevaluate what's valuable, and they ignore the prices. I don't know when that's going to happen, but it's going to be pretty chaotic, and it'll be pretty disastrous. I don't think it happens this year. I don't think it happens next year. It probably takes 5 or 10 years for this whole system to finally break. Maybe 20 or 30, who knows? It won't happen fast, and I don't expect it to. So things like Bitcoin, Ethereum, these new emerging technologies that bring financial services to the entire population without discrimination of race, color, creed, or borders, that is valuable. Anyways, that's what I just wanted to share that, ladies and gentlemen. Thank you all for joining us today. Give us a thumbs up if you like this content. We see some volatility coming into the market. Yep, also measured again by the downside of the S&P 500. There are other assets. People think that gold is an inflation hedge. It's not. It hasn't kept up. Not even close. But again, the important part here is to understand that these other assets, let's go and look at the monthly for silver. So here's silver between oh, nice. We got a lot of data on silver. This is good. Okay, wow, look at silver price all the way back to 1800. Jesus, this is great. So look at this. Had you bought silver in 1901, you'd be up only 4,000%. Okay, so just keep that in mind. Buying silver in 1901 to today, you'd be up 4,000%. But had you bought Avalanche, just in September alone, you would have been up 290% and around 1,000%. One of the most extraordinary aspects about being in this early seed stage, kind of close to global participation levels, is there is an extraordinary amount of room for upside. And even though the downside comes into play, you need to be prepared for it. And the best way to be prepared for it is to understand these macro perspectives, is to understand that the dollar is not a valuable asset. It is a hallucination of the human species right now to assume that it has any fucking value whatsoever. So just remember that. A lot of people are hallucinating. Anyways, thank you guys all for joining us today and allowing me to go through, I don't know what these are, just a rant moment. I don't care if the bull market is over or not. It doesn't make a difference. The same thing is going to happen to the currency. They're going to inflate it. The asset prices will likely continue to melt upwards. And at one point, somewhere in the not so distant future, again, whether it's 10 or 20 years, you are going to see a disastrous moment where we either capitulate and totally move into digital money, or it all blows up and we go back to farming. Now, I don't know which one of those it's going to be. I definitely don't think I'd make a good farmer. So hopefully it's not that one. Well, I do like farming. I just don't think I make a good one. Anyways, I'll take a look at a few of your guys' thoughts and questions here. Remember to give us the thumbs up if you like this content. Thank you all for joining us, giving me the freedom to rant and riff and kind of explore this area. I don't know what I'm going to say when I start these videos. I just know that I have a thread that I want to follow. The thread of this today's video is the bull market over? Well, I don't actually think it matters. And here's why. So we'll take a look at a few of those thoughts and questions. Did you bring your harmonica in your luggage? No, I didn't. I'll pick up a smaller instrument for my travels though. Keep it on that one. Thank you guys. What should I accumulate instead of fiat? Assets. You should accumulate assets, not fiat. Good assets, valuable assets, property with water, with food, productive businesses, all sorts of fun things you can come up with, I'm sure. But what makes you, what you're most interested in almost always makes the best investment, because then you keep showing back up, and you make a much better investor. Brian Baker says, thank you for streaming this content, Dr. Bear. You are spot on. Well, I appreciate that. I'm just riffing and ranting and learning. So I appreciate that you guys enjoy this content and find it's valuable. I'm also discovering and learning what's happening as we're going. So thank you for bearing with me. Room service, yes. Let's take just a few more questions and comments you guys left. Roy says, I like farming. I like farming too. I have 150 fruit trees on my property. I've got a little greenhouse. I'm just not good at it. I'm good at planting stuff, but I'm horrible at like pruning it, keeping all the bugs off of it. Bullish Charles says, I joined you after seeing you around the blockchain. Well, thank you for that. Again, a big shout out to the BitBoy squad. They you over 4,000 new subscribers because of that. And this Tuesday on this coming Tuesday on Around the Blockchain, we've been invited back to share our riffs and our rants with the BitBoy squad. So thank you guys all for giving us those +1s and enjoying our content. If it weren't for you guys, we would have probably not been invited back. So thank you for everyone who was so supportive of that episode. Are you in Bali? No, I'm not. So here's the thing, ladies and gentlemen. Okay, so I have this fun thing where we have like a board and a council, and every Wednesday we have a meeting. And this meeting is full of some of the smartest, most intelligent, kind people I know. And luckily I work with them. And on last week's meeting, before this week where we are now, I asked the question, does Tiho leave? Does Tiho go to Bali right now? And 3 out of 5 of them voted no. So the other 2 of us didn't even matter if we put our hands up. And I decided to take that group mastermind as the thesis. Now, one of the things I would like to recommend to you is if you do not have this, try to find a way to start a mastermind group. Now, we have a private group. So for those of you that don't know, the disease of the early stage investor and trader is over emotional trading and lack of education. And the way to cure that is by joining a mastermind group. So we have a private mastermind group. And if you consider yourself adventurous and like to try new things, if you go to arcanebear.com/private, down in the links below, you can join our private mastermind group. Now, there is no risk to do this because if you are not happy, we will give you a refund with no questions asked. Everybody that's in there, almost 1,000 members now, are very happy. Some of them have been in there almost 4 years, and there's many stories of success because of this ability to keep showing up and be surrounded by a community that has good intentions. And back to my mastermind story. So my little tiny mastermind group of just 5 people, I trust and I respect their opinions. And often I will just take their opinion as more of a fact than my own thought because they're better lawyers or they're better accountants. Like they just know better. I'm not going to argue with the lawyer. Like, what the fuck do I know about law? So I just go, great. We'll lead with that. So do your best to join, whether it's joining our own mastermind group or getting like a few of your friends where every Wednesday you guys get together and like pontificate and create conjecture and hypothesize and just shoot the shit. It has been an extraordinarily valuable part of my life, and I think everybody should have one. I also like mentors, although they can be a little bit harder to find. A mastermind group is usually a little bit easier to build because you can get a few people that like will be happy to join you. Anyways, it's here with the Arcane Bear. Thank you all for joining us. I don't have any instruments with me right now, so I can't play any music. But I could, I will look for something that we can travel with because we're going to be spending some more time on the road. Again, thank you guys. I'm so deeply grateful for the opportunity to be able to do these things. The fact that, again, we can live stream and like zoom in like this, be like, hey, you on the other side of this camera, thank you for joining the Arcane Bear. We'll see you guys on the next episode. This is Tio, and from the rest of the Bear family, we love you guys. I'll see you again. Wait, tomorrow? Yeah, we'll be back tomorrow.